How's it going, everybody? Welcome to another edition of Chart Request Live. I'm your host, Steve Straza, Director of Research at All Star Charts. Here with me today, my esteemed co-host, Patrick Dunawilla from the Chart Report. We're here to basically discuss all of your chart requests. Maybe we'll sneak in one or two of our own. We'll figure it out together. So what's going on, Pat?
Happy Thursday. I just got done taping an interview with Ari Wald for Trend Lines Over Headlines. That'll be out tomorrow. So that was exciting. Good way to start the morning.
That'll be a good one.
Yeah.
Everybody wants that.
All right. You ready to kick it off? We got a couple from the email already. Let's kick it off with SBS.
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 Something from Sao Paulo.
Well, it does look like a Brazilian one, doesn't it?
Yes, this has got to be a Brazilian ADR.
A water utility.
Utility?
Yeah.
Pay dividend? Let's see.
Looks like 1.93% dividend yield.
I'm seeing 2.3, but a lot of times the data providers get it wrong with the ADRs.
Okay.
So, look, you have a pretty clean level right here. Right here. They're always moving stuff around on me. Trading field. All right. So what? $12 up to about 12.30. I have a couple touches here. We're running right back into this level today.
And that's a daily chart.
Yes, this is a daily. 200-day has had time to, curl higher. Really since last year now. So I like this. Above 12, this is okay. Really low beta or low volatility kind of a stock. It'll pay a nice yield, it looks like. Let's zoom way out, see how it's done over time. Not terrible. Yeah, if this is what you're into, $12.
Yeah, I mean, really struggling since COVID, but like you said, that's a nice clear level, little base there too. So the next one we got is DraftKings. Two different people, Steve, have requested this one.
Yeah. Listen, it failed. It at least failed its short-term pattern, right? So primary trend is up as long as we're above, this very clear line in the sand around 2150, right? The reversal's on. So any of these shorter term pattern failures could lead all the way back to this breakout level of 2150, right? So that's how we have to look at this from a risk perspective. As far as trading it goes, we were drawing little, short-term coils and patterns like this on the chart. Same thing a couple months ago, right? We were looking at something like this. Buy these breakouts. But the most recent one here, right? We could have drawn it back here just before we got the base breakout, right? And you could trade these short-term patterns throughout uptrends. It's a good strategy, in my opinion. I do it a lot. So this one, most recently, though, just earlier this month, failed, right? We poked our head higher out of this little flag or pennant, and then we shook lower, gapped lower, right, out of this little short-term range. And now the question becomes, do we find support here at this old, shelf of highs from May and June, or are we headed all the way down for a retest of the base breakout level? Really as simple as that for me, Pat.
I like that you kind of focused on the short-term patterns there, so I think you're probably the same way. A lot of the times when we start bigger picture, we kind of want to look for the structure first and then go into those. But that's a really good point there. Those short-term patterns were resolving higher. Now they're not, right?
Yeah. The character of the trend, at least over the short term, has changed.
So I got a little bit more bullish of a one, a lot of bit more bullish one. You ready for it?
Give it to me.
Hess.
I'm zooming out on this one. This is such a beautiful base. We've been.
Oh, wow. I didn't know it went all the way back there. I was just looking at that short-term base.
Oh, no, it goes back. So we've been writing about this one, covering this one for a while on the blog. I think, if you are in the camp that, it is a new secular bull market for energy, that began off the COVID lows, right? Energy was the outperformer for a few years. Now it's gone sideways for, a year or two. And now it looks like we might resume higher. So if you're in the camp that this thing's just getting started for energy and there's another leg up from here, then I think you want to buy the patterns that look like these. And there's a lot of them, especially in the explorers and producers space, right? You can find these monster bases that are just now resolving higher, making, new fresh 15-year highs, and you can get into these trends. These are structural breakouts. They're just getting started. Hess is a great example of exactly what we're talking about. Let me just clean this up a little bit here. I don't have my fib settings how I want them. There we go.
Great request, H Chan. This is a really nice one.
Yeah. So look, what do you do now that the breakout already started, right? Like for me, in a perfect world, I would have entered somewhere like here after the retest around 130. It's not really realistic. Most traders aren't nailing that entry, right? So
Well, Monday morning quarterbacking.
right. So what do you do now? Is the question. If we zoom into a daily, right? We got another nice base shaping up, right? This is those old 2007 or 2008 highs right here. Right? So look at how the market is still respecting this level 15 years later, reinforcing, its importance as a polarity zone. So we're above there. We got a nice little range here. Give yourself a little resistance line at the pivot highs from January of this year. Call it 160. We're above 160. You want to buy on strength, target of 196.
Yeah, and you could even draw a little inverted head and shoulders there if you really wanted to. But the point is just really bullish looking chart, right? And breaking out in two different time frames.
Yes, it looks good. Look, there's a lot of nice opportunities in energy right now. Like I said, this is one of them. Look at those big bases. Good place.
Well, I want to get to more of the tickers in the chat. John McCarthy requested PR. And guys, keep the tickers coming.
I like this one. Permian Resources. Yeah. This is one of the better looking charts out there in energy. It really is. Let's fib it out here. And now I want the retracements. Before I didn't want them. Now I want them. Not really giving me clean levels here. Look, the reversal's on in this one. I think that's clear. It's really been straight sideways for 2 years now with an upward bias, right? So this one's just like steadily grinding higher, not really ever ripping, but maybe that changes. I think with something like this, you just use the pivot highs to try and get in, breaking out of a very, very short-term coil right now, just above its highs from March, right? So you could use that level, $12 to get in, and then use the highs as a price target. So
I like it.
23.
A lot of nice setups in that space right now. Let's do Intel. Wing of Tech requested Intel, INTC.
So Intel's a tech stock, so naturally we should chart it against tech and see, what this stock really gives us from a leadership standpoint. This is about as bad as it gets. I haven't had a nice thing to say about Intel for a long time, and it just continues to get worse and worse. There are semiconductor stocks that are some of the market's top performers, and Intel is literally at the bottom of the list in terms of performance in the semiconductor group. It's just not the vehicle you want to express a bullish thesis on tech or on the chip making industry at all. They've fallen way behind. The relative trend shows this, just steadily lower. If we look at just Intel on an absolute basis, I mean,
Steve, was this one in the Dow? And if so, it got kicked out, right?
Not yet.
Oh, it's still in there. Wow.
It's amazing. Dude, I mean, Intel is one of the biggest companies in the world. These guys were in such a leadership position.
Are they bigger than NVIDIA though?
It should be them doing what NVIDIA is doing today. What?
Mm-hmm. Are they bigger than NVIDIA though? Isn't NVIDIA bigger?
Not anymore.
Yeah.
But they always were. I mean, that's a new thing. NVIDIA probably passed them out a few years ago, but it hasn't always been that way. Look, this is a messy chart. Most of these 200-day moving averages are, really curling steadily higher these days. Intel, still kind of flattish. I guess it's sloped higher. but it's messy. I mean, where do you define the base breakout here, Pat?
Right. Yeah. Maybe
Right.
around that 30-25 level, but even then, like you said, just failure after failure.
It's not, there's just so many better options. If you're looking for long exposure, there's so many better ways to do it.
Yeah, I would agree with that. What about Boeing? BA.
Nice. I like Boeing. Set up good right now. It had this short-term little base here. Right. So it had like a nice little base breakout down here. Right. So off the lows from last year, nice little base, came up here, consolidated. Looks a lot like the Dow did this year, right? Just in the sideways little saucer. Recently broke higher, was in this little short-term coil here. Didn't work out. Now we're headed back lower, probably get a retest of this little saucer breakout. So call it 220. I think that's a fair place to enter, right?
Yeah, that one's a lot cleaner than the last one we looked at, right?
Yeah, so 220, you can get in there and then use a target back at these 2021 highs, 275.
All right, nice request there, Nick Bundy. Let's move to corn.
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 Was it ZC?
No, just straight up the ETF. CORN.
I'm not looking at corn. I'm not looking at the futures.
Well, let's look at the futures first, and then we'll take a look at corn, see how they compare.
So you always want to do that, right? When we're looking at an ETF that is designed to track an underlying, take a look at the underlying first and see, is this even something I want to own? And then have to rely on a fund manager to own it in the right way for me and make sure it's the right vehicle. That's another decision, right? In terms of corn from a futures perspective, I don't know, Pat. You're always looking for these head and shoulders patterns. Like, what do you think?
Yeah, I mean, that certainly looks like a
own?
distributive top. You call it a head and shoulders, whatever you want, but the fact that it can't make higher highs, I think, is enough to at least get you not too excited about this one, right?
As long as we're down here, right below this 500-ish level, this top is completed. And you got to be looking for downside levels, not upside levels in a chart like this. If we do hook higher back above 500, very ownable. Then it becomes one of those not a top patterns, failed top patterns. And those we really like owning because, like, if you zoom out enough, corn is coming off of a nice uptrend, right, over longer time frames.
Yeah, do you mind throwing RSI there? I'm curious to see if there's a divergence.
I was thinking the same thing, and I don't have it on this chart, but yes, let's do that. Yeah, big time, Pat. Big time.
Okay. Ooh, look at that.
So that's the RSI divergence Patrick's talking about.
So maybe it hooks higher, but I think you said it best there. As long as you're below that level, you want to be looking for downside levels, not upside levels.
Yeah, but you're right. Interesting. RSI even stayed out of oversold territory, even on the incremental lows from price. And now let's just flip up the ETF quick, right?
Yeah.
Same thing here. This one looks less like it's already broken down. I would draw this really thick, right?
Yeah.
This whole area is of interest here. So lower bounds absolutely can't own it down here below the pivot lows, 2180-ish, right? 2185-ish. If we do hook higher, maybe use these lows from last July as an entry point, 23. And again, you would have to play this as a failed top, right? And it would be very important that corn, so it'd be ZS that we were just looking at, that ZC, I'm sorry, that corn also looks like a failed top, right? Like we talked about here.
Yeah. I think that's a really good point. It's interesting that the ETF looks a little bit better. So this one's from Gray. He wants to see Upstart. And we'll make sure to get to some of the others too. We got Wavy's looking at CNX next, so we'll get to that next. But let's
Is this
do
the buy
Upstart.
now, pay later, or no? This is like an employment company.
I
Oh,
always get that one
yeah,
confused.
AI lending platform.
Yeah, there you
That's what it
go.
is. Maybe
Got
now.
it. Got a real sexy term in there, right? AI.
I thought it was buy now, pay later. All right, so I'm thinking no. For this one. See, a lot of these heavily shorted stocks had a great time in like May, June, July. And you see that here. So with a lot of these shorted names and a lot of stocks that have AI in their descriptions, like we just read here. Right. So that's what happened here. The AI hype is totally coming off. Also, I would be careful with any of these AI stocks. So this is just like disclaimer if you're trading these AI hot names, they're all going to move off of Nvidia's report.
That's a really good point. What is that tonight?
No, when is it? Let's see.
They are one of the last
Wednesday.
ones for next
week.
Wednesday.
So Nvidia reports everyone thinks they're going to absolutely knock it out of the park again. Blow out the crazy heightened guidance from last quarter, and now everybody thinks is going to get blown out.
And real quick, that was the thing that started it all, right? Wasn't it Nvidia's earnings report that I mean that got going, and then from there the narrative was just AI is driving us out of the bear market.
It was specifically like the forward guidance number that everybody was like, that can't be real. And now, 3 months later, that we're coming up on the report, all these analysts are putting out reports like, oh yeah, they're going to blow that away. So
oh geez,
really long way in terms of like expectations for Nvidia, right? We went from a stock that was in like a 60% drawdown, everything was going wrong, and it's a long duration equity. Oh no, right? To now like everything is perfect for Nvidia. So if they don't continue to meet and beat expectations, the whole hype can really, air can come out of this AI rally.
Yeah, I think
and that can be true for all these names. So
that's a really good point.
So for something like Upstart, I mean, short-term momentum is nasty to the downside. Not quite oversold, but close. I think if you had to enter something like this, you could define your risk right here. But again, I would want to be really careful with something like this. So like 25, we got the gap down and then a couple touches here around this 25 level.
Yeah, that definitely seems like a pretty important inflection point.
That's like no way below there for me, right? If you want to play around with it above there, hope for another short squeeze type of AI fueled rally, maybe.
Look at that. They've filled the gap, and that's pretty much all you got there. You saw some overhead supply in there. I don't know what happened on that gap back in June of last year, but you got to imagine there was some overhead supply that was created, right? With that massive gap down, a lot of back holders.
You're making a really good point. Like, it's no coincidence that the stock ran right back to these, this little gap zone.
Right around 70 there. Yeah. I mean, you got to imagine, right? If you were going, that was earnings. So imagine if you were going into that earnings report and you were bullish and then all of a sudden, bam, it's down 20% or whatever it fell. And you didn't get to see your bailout price until just now, right? Until a year later. And that whole time, you're probably just thinking, get me back to break even, get me back to break even. Please, I'll never make a bad trade again.
That's why we call it market memory, because people literally remember. But
people forget.
The stock is down 56% since late July. So that's another thing to keep in mind. Like, these stocks, sure, great to own when they're moving higher like it was in May, June, July, but sucks to hold them when they're moving against you.
Yeah, volatility cuts both ways. So NASDAQ Poppy wants to see a quarterly chart of cliffs.
I love the request. Okay.
Not a monthly, a quarterly.
Quarterly. Here it is. You know who else likes quarterly charts? I know one other person who likes a good quarterly. Bill Pearlman loves a good quarterly chart.
Really?
Yeah.
Huh. He's super long term,
right? Yeah. That's why he's such a calm, chill guy, because he's looking at quarterly charts.
Yeah.
So look, this is tough here. You don't get much in these quarterlies. Maybe like this.
Well, maybe we start with the quarterly and then break it down, monthly and then weekly.
Quarterly, I see a level here around 1350, 14.
NASDAQ Poppy is also a big fan of the quarterlies.
Love it. So that's the quarterly. Look, structurally, it would be back to those 2018 highs, right? Which is a huge level for so many things, especially cyclical assets. 2018 highs, big level. So that's about 13. When we zoom in a little bit.
Well, and it almost looks like it kind of had a fail breakout at that 2013 highs. It's tough to tell with the quarterly, you know.
Look, if we're above, this is the level. We're above those 2018 highs. It's all good for these guys. And
Like,
you know, these are the types of stocks that we're looking for rotation into. If this whole hey, out of growth into value into cyclicals thing is really going to take place, Cliffs is the type of stock that should work. There's a lot of better looking commodity stocks out there right now. Maybe this is some sort of a catch up trade.
yeah, NASDAQ Poppy says that's a good point. When you go back to this one, it's been down for so long, but starting to see some movement here.
Yeah, like could you find a better commodity stock to buy right now? A better looking chart? Absolutely. But Cliffs is a big one. You know, it's a big name and you have a very clean level there. So I don't hate this for some sort of a mean reversion catch up trade.
And what are they? Are they steel?
There are a lot of different stuff. I think mainly steel though. Yeah, that's why they're trying to buy US steel. Yeah.
Oh, okay. Yeah, that's right. So NASDAQ Poppy wanted to see Oxy, but we'll get to that in a second. I want to get back to Wavy's request. Wavy, how you doing? Shout out to you. Let's see CNX.
Nice. Is this the old console?
I believe so. I'll take a look.
Yeah. Oil and gas, shale company, Appalachian Basin. All right, some nat gas exposure. Nice. It's really been working. It's May. This one's been really strong.
Nice find there, Wavy.
Yeah, I think with something like this, you just keep it simple. Got the pivot highs right here. 23, 24. Depends if you want to look at it on a daily or a weekly. Right? That's it. Might need some time to cool off. Look at RSI. Super hot right now. Right? I don't think you want to like rush into this one here after it's been up. Gosh.
Ooh, look at that.
So just since May, you know, 55%.
Might need a little reset, is what you're saying.
Yeah, and think too, right? Like just over the past few weeks, stocks have been correcting since mid-July. This thing's been just screaming higher. So I do like the relative strength. Just be patient with it. You don't need to like chase into this one. Maybe let it cool off. You get a little sideways here, then eventually you get a breakout. You can buy it on strength above these 2022 highs.
So we got one from Palm Bear. We got two actually. We got Tesla and Seas, SEAS. You can go ahead and pick out of those two.
Love SeaWorld.
Okay.
SeaWorld. Not a fan of SeaWorld stock though.
Oh, okay. I thought you were talking about the stock. You're talking about the theme park. Like,
no. This is it. You know, I think this one, for now at least, if I were to look at how terrible momentum has looked here. You know,
yeah,
get overbought, haven't been confirming new highs all year, right? So these new highs from February never confirmed by momentum. Rolled over, got oversold again, or just about here today. If you zoom in on something like this, this does not excite me, right? From the long side, draw something like that. You had a nice little channel here. This is a clear rollover, right?
I mean, you had your chance there in February. It had its chance to break out, and that was looking a lot better than most stocks were at that time. So
we would have drawn this very differently back here in Q1, right?
Yeah.
Anyway, rolling over, I think this one is, you know, has like 40 written all over it, right, Pat? Right back to July 2022.
Totally.
And then the question becomes, right, if you zoom out a little bit more on this one, that's a big level, right? So we're heading back to 40. And then, boy, if we break there, I think things get ugly for SeaWorld.
Yeah, it looks like
it's better than Disney, though. If we're talking about Parks, amusement park stocks. It looks a lot better than Disney.
What about Six Flags? You take a look at that one.
Let's do it. Were you a Six Flags guy when you were younger?
I was a bit of a Six Flags guy. Yeah, we had one not too far from us.
Yep.
I want to say there's one in Connecticut. No, near you.
Yeah, there's one I think up. No, it might be in Jersey. I don't know if it's in Connecticut. There's one nearby that we used to go to when I was a kid.
Okay.
I don't think it's Connecticut. I don't know. It looks terrible too. Yeah. So, but Disney is the worst. Oof.
Oh
Disney,
man,
Disney, what are you doing?
it's too bad Legoland isn't public though, or Lego the company, right? Could you imagine what that chart would look like?
I wonder if
And,
there are any other theme parks. I'm sure there's others that we don't aren't thinking of. All right, what else we got?
all right, let's take a look at Tesla. That's another one from Palm Bear.
Yeah, I don't know. Hasn't been good. No. So, you could draw something like this. Tesla broke out of this base, I would say back in May, right? Had a nice run higher, and then just started printing this little short-term top here. Look at momentum. Yuck. That is classic bearish momentum divergence.
Steve, is this the worst looking mega cap? Would you say?
Worst looking mega cap.
Yeah, I mean, and to preface that question, I think they all look decent. I don't think they're none of them look terribly bearish. Even this one, in my opinion. But what do you think the worst looking mega cap is right now, or the one that just hasn't kind of rebounded along with the rest?
You want the worst looking mega cap?
Yeah.
How's that? Is that good? I mean, how about
You really hate your telecom stocks. What did they do to you, man?
How's it tell? I don't know.
Um,
Oh, there's a lot of bad looking mega caps. I mean,
well, okay, I meant the FANG stocks,
all
or
right.
Magnificent Seven, if you will, not necessarily mega caps.
Apple looks a little scary here.
Okay,
Like
that's fair.
the speed at which Apple got oversold, and just a nasty breakdown from this rising wedge back below, like that's a breakaway gap, bearish breakaway gap, right? Like
Yeah,
massive failure.
and right at a key level too, right?
Yeah, so you're getting more downside here from Apple. That one looks particularly bad. I got to be honest. Not a good thing for the indexes, right?
No, it's not. So before we go though, Prince Galloway, AMD, real quick.
Ooh, so semiconductors, AMD included, Micron, they had this huge day, Monday, right? Came into the week super hot. Let me switch this over here. Too much annotations on there. Sorry.
You said Monday. Oh, that's right. Yeah, wow. Man, semis were up 3% that day. That's a pretty big move. Of course, gave it all back. I mean, we're
Look at Monday's
where we open.
Monday, August 14th, right here, right? Massive candle. I was getting excited. I looked at something like this in Micron. Look at this candle.
Oh, I know.
I was like, oh my gosh, happening right here at this key level. And in all of these stocks and the indexes too, 3 days just in the opposite direction. No follow through at all. And they don't look good, right? So something like AMD, just want to draw a little support right here at the pivot lows. Boom. I can touch this up and draw a little arc here. That's it for AMD. I would be looking for downside levels here, not upside levels for now.
Okay. Hey, this is quite the claim here. TLT is the worst chart, even though it's a bond, and that comes from Michael Westrick. What do you think of that statement? TLT is one of the worst.
I was talking to Ian about a half hour ago. I said we got to do TLT for Investo today.
Man, look at that.
We're right back here at the lows. This is when stocks bottomed last year too.
Yeah.
This is when all risk assets bottomed. Stocks now been cruising. You want to see? Want to do some fun with charts? Should we overlay?
Always.
Show you what I'm talking about. So
Yeah, you had the breakout in the 10-year yesterday.
yeah,
And, we say that, but I think you still got to give it a little time. The week isn't over yet. That's a very major level. Um, and you know how things can kind of pivot. It's more important that we're at a key level. And it's really important not to, unless you're trading these things, to have too much conviction.
yep.
Or even if you are trading it, keeping an open mind, right?
Listen, 10s and 30s, if they take out this it's like 4-4 and 4-3 levels that they're both running into right now, those pivot highs from last year, rates are going higher. You have to be positioned that way. So here's what I'm talking about. They both bottomed. Here's the S&P 500 here in the candlesticks, and this is bonds here in blue. Right, so we both came off nasty downtrends, and they bottomed in October of last year, and then bonds, ripped higher into December, just like stocks did. They both, stayed together with pretty tight correlation right up until here mid-March, right, where stocks are really even mid-April. Stocks continued higher. Bonds were printing a nice base up until then, and all of a sudden they've rolled over in the opposite direction.
Yeah, and I'm trying to think like what happened around that time, and that was obviously the banking stuff, right? So I mean, what do you have any idea? Obviously, it's kind of gets a little dangerous when you start wondering reasons why price is behaving the way it is. But do
The
you have
market,
any ideas?
I think the market got around to realizing that rates are going to go higher, and maybe stocks were okay with that, but obviously bonds can't be. I don't know.
Obviously.
So that's it. We got to wrap it up.
All right. Well,
So
thank you guys in the chat. Make sure to email us if we didn't get to any of your requests today, and we'll be sure to hit them next week. It'll probably be JC charting them out, so you'll get the maestro himself breaking them down for you.
all right, good. Thanks for joining, everybody. Tune in tomorrow, 8:30 every morning for the morning show.
Cheers.